Hello, everyone, and welcome back to Daily Dollars. Today, we're diving into a hot topic that's making headlines and could impact millions of retirees across the country: the taxation of Social Security benefits. With new bills introduced in Congress, many are wondering, will Social Security taxes finally be eliminated? Is this just another political promise, or could real change be on the horizon? We'll try to break down what's happening, what it could mean for your monthly checks, and the financial consequences. So stick around. But before we get started, make sure to hit that like button and subscribe to Daily Dollars for timely updates on Social Security news. All right, let's jump in. Many retirees assume that once they start receiving Social Security, their benefits are completely tax-free. However, for those who earn above a certain threshold, the IRS requires that a portion of their benefits be considered taxable income. Here's how it works. If your combined income, which includes adjusted gross income, non-taxable interest, and half of your Social Security benefits, exceeds $25,000 for individuals or $32,000 for married couples filing jointly, part of your Social Security may be subject to taxes. Depending on your total income, up to 50% or even 85% of your Social Security benefits can be taxed at your regular income tax rate. For context, nearly 40% of Social Security recipients pay some form of tax on their benefits. However, that also means that about 60% of retirees don't pay any tax on their Social Security benefits because their income remains below the taxable threshold. Now, let's talk about the recent push to eliminate these taxes. The idea is gaining traction, with lawmakers from both major political parties proposing changes. There are currently three key legislative proposals introduced in Congress. First, the You Earned It, You Keep It Act. It aims to completely eliminate federal income taxes on Social Security benefits. Second, the Senior Citizens Tax Elimination Act. This bill also designed to remove taxes on benefits. A third proposal suggests raising the income threshold so fewer retirees end up paying Social Security taxes. These bills argue that retirees, many of whom live on fixed incomes, should not have to pay additional taxes on money that was already taxed when they earned it during their working year. The supporters of these proposals highlight that eliminating Social Security taxes would put more money in retirees' pockets, helping them cope with inflation, healthcare costs, and the rising cost of living. While these proposals sound promising, the big question is, how will the government replace the lost revenue? Social Security taxation generates roughly $50 billion per year, which helps fund the Social Security program itself. If these taxes were eliminated without replacing that revenue, it could worsen the financial challenges the program already faces. To understand this, let's look at the numbers. In 2023, Social Security paid out approximately $1.2 trillion in benefits. It only collected about $1.1 trillion in revenue, meaning it had to dip into the trust fund to cover the shortfall. Current projections estimate that the Social Security Trust Fund could be depleted by 2033 or 2034. If that happens, benefits could be automatically reduced by about 20% for all recipients, unless Congress takes action. This is why some policymakers hesitate to eliminate Social Security taxes outright. Instead, they argue that tax revenues should be preserved or replaced with another source of funding to avoid speeding up a potential funding crisis. So, the big question is, what's the likelihood of these bills passing? For Social Security tax reform to become law, a bill must pass the United States House of Representatives and Senate, and be signed into law by the President. While several lawmakers have expressed support for ending Social Security taxes, passing a bill through Congress can be a long and complex process, especially when it involves significant financial implications. Some experts believe that instead of completely eliminating these taxes, Congress might take a compromise approach such as raising the income thresholds so that fewer retirees are affected. However, with public concern over retirement security, there is increasing pressure on lawmakers to take action. If you're concerned about Social Security taxes and want to stay informed, here's what you can do. Follow any legislative changes, check your tax situation, consider tax planning, and speak with a financial advisor to explore strategies that may help you reduce your taxable income in retirement. That's a wrap for today. Let's keep the conversation going. Do you think Social Security benefits should be tax-free? Or do you worry about how it would impact the program's long-term funding? Share your thoughts in the comments below. If you found this video helpful, be sure to like this video, subscribe to Daily Dollars, turn on notifications so you never miss an important topic. Thanks for watching, and I'll see you in the next video.